In recent years, the global stage has been marked by tensions, economic shifts, and intense competition, with the United States-China relationship at its core. These two economic giants are deeply intertwined, with China emerging as a formidable player in trade, technology, and global influence. Yet, the United States, a long-standing global leader, finds itself facing new challenges, both domestic and international. One of the most significant challenges lies in managing its relationship with China, especially given the volatility of United States domestic politics and the recurring cycle of electoral changes. The shifts in United States political leadership have resulted in varied approaches toward China, from cooperation to confrontation, leaving many wondering about the future trajectory of this complex relationship. As the world watches the outcome of yet another United States presidential election, China's position is notably calm and composed. Chinese officials, scholars, and the general populace seem largely untroubled by the political fluctuations across the Pacific. China's confidence stems from a unique set of advantages: a stable political system that enables long-term planning, a resilient economy that has adapted to trade conflicts, and an expanding global influence anchored by initiatives like the Belt and Road Initiative. According to Di Jiangwei, a professor at Fudan University, this calm reflects China's strategic position and its preparation for any potential outcome in the United States election, even a potential Trump 2.0 presidency. This essay explores the multiple dimensions of China's perspective on United States political shifts, especially in the context of a renewed Trump presidency, and examines how China's stability, trade strategies, and global ambitions position it strongly in the face of fluctuating United States policies. Through an analysis of trade conflicts, the evolution of China's domestic market, and Europe's shifting stance toward autonomy, this piece provides insight into how China's long-term strategies equip it to deal with the challenges and opportunities presented by United States foreign policy. One of the most striking contrasts between the United States and China lies in their respective approaches to governance. The United States political system is designed around frequent, competitive elections, fostering a system where each new administration often shifts dramatically from the previous one. In recent decades, United States politics has seen sharp swings in policy, especially when a new president from an opposing party comes into power. This volatility, often referred to as the pendulum effect, can lead to policy reversals, making it difficult for the United States to implement long-term strategies in areas such as international trade, infrastructure development, and foreign policy. China, in contrast, benefits from a centralized governance model led by the Communist Party of China. This model prioritizes continuity, stability, and long-term planning, allowing the Chinese government to implement strategic initiatives over decades rather than years. The contrast between the two systems is clear. While the United States must adjust to rapid changes every 4 to 8 years, China can set its focus on gradual progress and long-term goals. This difference has significant implications for the way each country approaches its global role, economic planning, and response to international pressures. Chinese scholar Di Jiangwei emphasizes this point, suggesting that China's governance structure enables it to adopt a proactive and calculated approach to international affairs. While the United States faces potential upheavals with each election, China's stable government has remained consistent in its objectives, including becoming a global economic powerhouse and achieving self-reliance in key industries. In the context of a potential second Trump presidency, this consistency offers China a considerable advantage. Unlike European countries or other nations heavily influenced by United States policies, China does not feel compelled to adjust its policies based on United States electoral outcomes. Instead, it focuses on fortifying its own economic and geopolitical strength, preparing to address challenges in ways that align with its long-term objectives. The stability offered by China's centralized governance is evident in its comprehensive policy frameworks, such as the Made in China 2025 plan, which aims to transition the country into a high-tech manufacturing leader. This initiative, like many others, reflects China's capacity to prioritize long-term goals even amid international uncertainty. In contrast, United States manufacturing strategies, especially those proposed by the Trump administration, are often viewed as short-term solutions aimed at appeasing voters rather than establishing sustained economic progress. China's consistent approach to international relations also contributes to its strength. While the United States may oscillate between cooperation and confrontation with each administration, China's leaders have maintained a steady course, focusing on increasing the nation's global influence through trade agreements, infrastructure investments, and diplomatic engagement. By cultivating partnerships across Asia, Africa, and Latin America, China has strategically positioned itself as a central player in the global economy. This stability allows China to weather shifts in United States policy without significantly altering its own strategic course. In many ways, China's stable approach has enabled it to develop a level of resilience against external pressures, including the ongoing trade tensions with the United States. Chinese officials have expressed confidence that the nation can withstand United States tariffs and other economic measures by diversifying its trade relationships and bolstering domestic industries. China's focus on building a robust internal market and reducing its reliance on the United States has already borne fruit, with the nation's domestic economy growing stronger even as trade conflicts continue. For example, in the technology sector, China has prioritized self-sufficiency, investing heavily in developing its own semiconductor industry to reduce dependency on United States-based companies. This strategic shift was accelerated by the United States government's efforts to limit Chinese access to certain technologies, particularly during the Trump administration. By advancing its domestic technology capabilities, China has not only mitigated the impact of United States policies, but also strengthened its position as a leader in critical technologies. The success of Chinese companies like Huawei and SMIC in developing competitive technologies reflects China's resilience and determination to achieve technological independence. Overall, China's long-term planning and political stability enable it to approach United States political changes with a sense of ease and preparedness. Rather than reacting to each United States administration's policies, China remains focused on its overarching objectives, which include economic growth, technological advancement, and expanding its global influence. This strategic patience provides China with a unique advantage in navigating the uncertainties of international relations, positioning it as a formidable global player irrespective of United States political dynamics. The United States-China trade war, initiated during Donald Trump's first presidency in 2018, marked a significant shift in the economic relationship between these two superpowers. The Trump administration's policy was designed to protect American jobs and industries, aiming to reduce the United States' trade deficit with China. The strategy involved imposing heavy tariffs on Chinese goods, with the hope of encouraging American companies to bring manufacturing jobs back to the United States. On paper, this approach appeared straightforward, targeting key Chinese imports to bolster domestic industry and deter reliance on foreign goods. However, the reality was more complex. Economic data and analysis reveal that the tariffs largely backfired, placing a heavier burden on American consumers and businesses rather than Chinese manufacturers. Estimates show that up to 92% of the tariffs were borne by United States importers and consumers who faced higher prices for goods such as electronics, clothing, and household items. These higher costs fed into rising inflation, directly impacting American households and dampening consumer spending. From China's perspective, the trade war revealed a key vulnerability in United States economic policy: the lack of understanding of interdependent trade dynamics. According to renowned economist Jeffrey Sachs, trade wars tend to harm both sides and often overlook the mutual benefits of global trade. China, as Sachs noted, has enriched the United States economy in various ways, from providing affordable consumer goods to facilitating profitable partnerships with United States technology companies. The economic benefits of this relationship go beyond direct trade, extending to global supply chains that integrate Chinese manufacturing with American design and innovation. Despite these mutual benefits, the Trump administration's approach was largely unilateral, imposing tariffs without securing concessions from China or seeking to mitigate potential harms to the United States economy. China, however, responded with a more calculated strategy. Instead of retaliating immediately, it imposed targeted tariffs on specific American exports, including soybeans and other agricultural products. These products, particularly significant in states where Trump enjoyed strong support, made China's response more impactful in both economic and political terms. The long-term effects of the trade war continue to influence the relationship between the two countries. American companies, wary of further tariff increases, have sought to diversify their supply chains, exploring manufacturing options in countries like Vietnam and India. Meanwhile, China has accelerated its focus on self-reliance, investing heavily in domestic industries, especially in technology and advanced manufacturing. The net effect has been a reorientation of global trade networks, with China moving toward a more self-sufficient model while the United States grapples with the unintended consequences of its own trade policies. Despite the trade tensions, the United States and China remain deeply economically intertwined. Their relationship, while competitive, is also cooperative at its core, benefiting from a unique interdependence that has fueled mutual growth over decades. The United States relies on Chinese manufacturing for a wide range of consumer goods, from electronics to clothing, which allows American companies to benefit from China's lower production costs. Conversely, China relies on the United States as a major export market, and Chinese companies see the United States as a lucrative consumer base. This interdependence is particularly evident in the agricultural sector, where American farmers rely on Chinese markets to sell their crops. China is one of the largest importers of American soybeans, corn, and pork, and these exports are essential to the United States' agricultural economy. When Trump imposed tariffs on Chinese goods, China responded by placing tariffs on American agricultural products, impacting American farmers directly. Many of these farmers had supported Trump, only to find themselves financially hurt by the trade war, which reduced their access to China's massive market. Jeffrey Sachs highlights a crucial principle of international economics. Trade is about mutual gain. The United States-China trade relationship has allowed each country to leverage its own strengths to mutual benefit. American consumers enjoy affordable goods, while Chinese manufacturers gain access to a vast and profitable market. In Sachs's view, this mutual gain is central to economic prosperity for both nations, and attempts to disrupt it come with risks that outweigh the benefits. However, the recent push for higher tariffs, particularly Trump's proposal to impose a 60% tariff on all Chinese imports, threatens to destabilize this economic balance. While intended to protect American jobs, such tariffs could result in higher prices for consumers and reduced market access for United States companies. China, with a more diversified trade network, may be able to withstand such tariffs better than the United States, especially if it continues to deepen trade ties with other countries through initiatives like the Belt and Road. One of China's most significant strategies in reducing its reliance on the United States is the Belt and Road Initiative, a global infrastructure project that aims to connect Asia, Africa, and Europe through a network of trade routes. Launched in 2013, the Belt and Road Initiative represents China's ambition to reshape global trade, creating alternative markets and establishing China as a central hub of international commerce. By investing in infrastructure, energy, and telecommunications in over 60 countries, China is extending its economic influence well beyond its borders. The Belt and Road Initiative has strategic benefits that bolster China's position in the event of a trade conflict with the United States. By fostering economic relationships with countries in Africa, Southeast Asia, and Eastern Europe, China has diversified its trade partners and reduced its dependence on American markets. Furthermore, these investments have helped China build stronger diplomatic relationships, positioning itself as a key player in global development. In contrast, the United States has not developed an equivalent project of global scale, focusing instead on domestic issues and defense spending. As a result, China's influence has grown in regions where the United States has limited engagement, such as Central Asia and parts of Africa. For countries in these regions, China's approach, which emphasizes economic development and infrastructure, is often seen as more beneficial than the United States' more traditional, aid-based foreign policy. By enhancing its economic footprint through the Belt and Road Initiative, China has positioned itself as a more stable and predictable partner for these nations, further solidifying its global influence. In recent years, China's domestic market has become increasingly self-reliant, especially in industries like automotive and technology. Western brands that once dominated the Chinese market have seen a sharp decline, as Chinese companies have grown in competitiveness and captured significant market share. The automotive industry is a prime example of this trend. Foreign brands once controlled 64% of China's car market, but today, Chinese brands lead with a majority share. Experts predict that this trend will only continue, with Chinese companies like NIO and BYD emerging as leaders in electric vehicle technology. This shift in market dynamics reflects China's focus on developing its domestic industries, reducing reliance on foreign products, and fostering local innovation. With policies that support homegrown brands and discourage dependence on foreign technologies, China is positioning itself as a global leader in sectors critical to the future, such as electric vehicles and renewable energy. By cultivating a robust domestic market, China has strengthened its economy's resilience, reducing potential vulnerabilities to foreign pressures. Europe's shifting role and its reaction to US-China tensions. As China continues to expand its global influence, Europe faces a complex decision whether to align closely with the US or seek greater autonomy in its foreign policy. Recent events, such as the Ukraine conflict and economic strains from US sanctions on Russia, have fueled calls within Europe for a more independent approach. Leaders like Italian Prime Minister Giorgia Meloni have publicly advocated for a shift away from dependency on US policies, urging Europe to prioritize its own interests. Europe's relationship with China is shaped by both cooperation and competition. While Europe has raised concerns about human rights in China, it also recognizes the economic opportunities that come from collaboration. European companies, particularly in the automotive and luxury goods industries, see China as an essential market, and the European Union has sought to maintain stable trade relations with China even amid US-China tensions. As Europe grapples with its own political and economic challenges, the possibility of a more independent foreign policy could open new avenues for cooperation with China. Future of US-China relations, possible outcomes under Trump 2.0. If Trump were to return to office, the US-China relationship would likely face new challenges, with the potential for both heightened tensions and strategic opportunities. On one hand, a renewed trade war could bring further economic strain, with Trump likely to push for increased tariffs and protectionist measures. These policies could disrupt global supply chains, increase consumer prices, and impact American businesses dependent on Chinese markets. However, there is also the potential for compromise. Analysts suggest that Trump may consider deals with China if they align with his priorities, such as investments in American manufacturing or infrastructure projects that generate US jobs. By focusing on mutual economic gain rather than confrontation, both countries could explore opportunities to stabilize their relationship and address areas of common interest. Lessons from Chinese foreign policy for the US Vice President-elect J.D. Vance recently highlighted a key difference between Chinese and American foreign policy. While the US often focuses on ideological goals, China emphasizes practical economic benefits. China's approach to diplomacy, grounded in infrastructure development and economic investment, resonates with countries seeking development rather than moralistic lectures. For the US, adopting a more pragmatic foreign policy focused on mutual interests rather than ideological goals could improve its global standing. Conclusion: navigating a new geopolitical reality. The US-China relationship stands as one of the most defining features of the current global order. In a world marked by shifting alliances, economic turbulence, and growing competition, both nations represent distinct visions of governance, economic strategy, and international engagement. The US, driven by an election-based political system, often sees abrupt policy shifts that affect its approach to global issues, whereas China's model, characterized by centralized and long-term planning, offers a level of consistency that many other countries cannot match. This essay has explored the various facets of this intricate relationship, including the impacts of the US-China trade war, the strategic significance of China's Belt and Road Initiative, and the evolving role of Europe as it seeks greater autonomy. With the possibility of a Trump 2.0 presidency, tensions could escalate once again, with potential increases in tariffs, further economic decoupling, and a continuation of the protectionist policies that shaped Trump's first term in office. Yet, China's preparedness for such a scenario reflects its confidence in its economic resilience, its global influence, and its diversified partnerships across Asia, Africa, and beyond. China's approach to foreign policy, centered on building infrastructure, fostering economic growth, and engaging in pragmatic diplomacy, has garnered its significant support on the world stage. This approach offers a sharp contrast to the US's moralistic and sometimes interventionist foreign policy, which often alienates countries that prioritize their own economic interests over ideological alignment. As Vice President-elect J.D. Vance suggested, the US could benefit from adopting a more grounded, interest-based foreign policy that emphasizes mutual respect and cooperation, particularly when it comes to China. Ultimately, the future of US-China relations will depend on both countries' willingness to balance competition with cooperation. As China continues to rise as an economic powerhouse with significant global influence, it remains essential for the US to recognize the value of a balanced and realistic approach to this relationship. A path toward mutual benefit, rather than confrontation, is not only possible but also desirable for a stable global order. While both countries have differences in governance and ideology, their economic interdependence and shared challenges in areas such as climate change, health, and global security offer powerful incentives to work together. In the coming years, the world will continue to watch how these two superpowers navigate their differences and manage their intertwined destinies. A relationship built on mutual respect and strategic cooperation could redefine the global landscape, setting the stage for a future in which the US and China serve not as rivals locked in conflict, but as partners capable of addressing the complex challenges of a globalized world.